Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Sunday, April 22nd, 2006, and we're going to go ahead and take a look at some stocks for trading on Monday. First of all, remember that we are in the middle of earnings season. I haven't checked the dates for when any of the earnings are due for these companies, so if you're going to consider holding them overnight, be sure not to be holding stocks that are due to report that night because it's really just not worth the risk when we don't know anything about the company or just trading them on a technical basis. Okay, so we've got Excelsius on the screen right now, symbol EXEL. And you can see the stock's in a nice uptrend. We've got the 10, 20, and 50-day moving average all heading higher. Stock has been stair-stepping nicely higher in here with higher highs and higher lows. And it looks like it's consolidated on light volume. We saw some volume come back into it on the upside on Friday. So I think it looks like the stock's ready to move once again. What I'd like to do is to see the stock pull back first to about $10.90. Once it pulls back to $10.90, then I want to buy it on strength above $11.05. So we'll look for the pullback to $10.90, then buy it on strength above $11.05. I think you can set your stop down here at about $10.82. So that'd be 23 cents of risk. And as far as an upside target goes, I think we're looking at about $12 a share for EXEL. That would give us, here we're looking at a weekly time frame, that would give us 95 cents of upside for just 23 cents of risk here. Next up is a solar company. These guys actually, I've read about them once or twice. They make silicon, I guess, for semiconductor usage, and they're building a big plant up in Idaho. Sounds interesting, but that's not why we're buying it. We're buying it because it looks like the stock is consolidated on light volume, and this thing does get going very nicely when it does get going. So it looks like it's ready to once again here. What I'd like to do would be to buy the stock above $6.10 a share. Above that level, I think the momentum picks back up to the upside, and we could then set our stop at about $5.98 a share. So that's just 12 cents of risk in here, which is very low risk, obviously. And what we're going to make our initial target is $6.60. So I think you're looking at 12 cents of risk for about 50 cents of upside. And I'd say, you know, if it gets to that 660 level, don't sell it all because this stock can get going rapidly higher, and there's a, you know, I believe there's a large short position in this one that could get hurt badly. So that's just a minimum upside target, and it's 50 cents away for the risk of just 12 cents. Let's take a look at a short sale. PLCM. I've got two more longs too, but Polycom, symbol PLCM. You can see it's chopping around up in here. It's had some trouble recently where it's dropped on big volume and kind of consolidated on light volume. It looks to me like the last couple of days is big volume. It looks like it's getting ready to drop once again. So you can see here we do have some higher lows and higher highs. What I'd like to do is sell the stock short below $33.20 a share. I think below 33.20, the sellers are back in control of this one, and what would make me doubt that and lower my stop, I would then put a stop at 33.55. So that'd be 35 cents of risk in this case on a short sale. And I think what we're looking at as far as a downside target is the $32 level. So it's looking like a risk of about 35 cents in Polycom for the opportunity to make about $1.20 in a short sale. And again, the market's in an uptrend, so the odds don't favor short sales as much. The market is extended here, though, and it just pays to have maybe one or two shorts on your radar just in case we do get some weakness. The solar companies have been real hot. eSolar, and I believe it is STP, kind of slowing down a little bit in here, so hopefully we're not late to this solar theme. But this company, Solar Fun, SFUN, or what am I talking about? That's what I would have named it symbol-wise, I guess. SOLF is the symbol for Solar Fun. And you can see the stock broke past some resistance at 1370 or so last week, on Monday, and did so on very big volume. The stock is then consolidated in a pretty tight range on lighter volume. So what I'd like to see, and above that rising 5-day moving average, which is nice to see. What I'd like to do with Solar Fun would be to buy the stock above $16.20 a share. Above 16.20, I think the buyers regain control of the momentum, and we could put our stop, and it's going to sound far away because it is, down at $15.70. It's a 50-cent risk at this point. However, once the stock gets up to $16.50, what I suggest is raise your stop to break even. So If it just rallies 30 cents, we're going to eliminate that 50-cent risk right away and raise our stop to a break even. As far as upside goes, I think the stock has the potential to run up to $18 a share. And this one, as you can see, when it gets moving intraday, it can really get going quickly and sustain that momentum. So above 1620, I think you want to buy it. Above 1650, you want to raise your stop to break even. And it's looking like a good setup to me in the solar group. Supergen, SUPG, stock is in a nice uptrend. It's pulled back and originally found support along that rising 10-day moving average. Now it looks like it's found some support along that rising 20-day moving average. And what I'd like to see in here is another buy on strength above $6.90. I think that's where you can buy this stock. Stop goes right down here at about $6.75. So we're just looking at 15 cents of risk for Supergen. And upside target, I'd say, is $7.50 a share at a minimum. So that would be 15 cents of risk for the opportunity to make 60 cents in SUPG.